So welcome back to the Rogue Trader podcast with me, Nick Leeson. Today I'm joined by Jason Sen. So we will be talking markets again, both from our own experiences and things that Jason is seeing in the markets this week. I think the two markets we're going to look at are going to be Bitcoin and gold. I think the other markets, the equity markets and some of the other markets that we both follow have quietened down a little bit over the last week or so, since there was an agreement between the US and China over tariffs. But gold continues to be extremely volatile. Just in the last 24 hours, we've seen it move the best part of $100, probably a little bit more than that, to be honest. So we'll get to looking at those charts and seeing what Jason sees there. But I just wanted to talk about the subject of volatility a bit, and the VIX in particular, which is sometimes referred to as the fear index. And I wrote in a piece that where I was covering the markets this morning, Jason, just about the fact that, you know, it popped up to 52, 53 on April the 8th. It's down to 18 yesterday, which gives a good indication of how these markets have calmed down over that period since Liberation Day and the onset of the tariffs. But it reminded, you're obviously an options trader, so you've got far more experience of this than me in terms of the way that it's priced into some of the things that you see within the markets. But it reminds me of my days back in Singapore when I must have been the option trader's worst nightmare. Because I wasn't selling options for fundamental or technical reasons. I wasn't even selling them for sentiment reasons. I was selling them because I needed cash, right? So yeah. I'd walk into the options pit and the market might be, you know, the market might be 15 bid at 18 or whatever it was at the time, and I'd sell as many as I could, right? It didn't matter. Like, you might have been there for 1,000, 10,000 or 20,000, but I was going to hit you for all of those. Then your next bid might be a little bit lower, and I was going to hit you there as well, because there were so many of them. I needed the cash in order to bring my account balances back in line so that nobody could see what else was going on within the markets.
I don't know how you did that.
Sometimes I used to generate my own volume by calling people who would be on the other side of the trade.
Yeah.
And, you know, everybody was buying into it. So there might be a customer, a FEMAT that I knew was particularly big in the options market. And I'd give him a call and, you know, are you interested at these levels? And there might be a little bid in the market with one of the market makers that I'd have to go through to get to his bid so that I could do some quantity. But it was, you know, it was just bonkers. And everybody believed it was this client that I was representing at the time. And, you know, I remember towards the end of 1994, I think it was, I was, so volatility, and this is why the story comes back into my mind today, but volatility or the VIX was up at around, or volatility in the options side of the Nikkei 225 was around 55% at the time. So fairly similar to the numbers that we're looking at now. And that crushed all the way down to 7% over a 2-year period. So not quite the massive move that we've seen here, but the option market makers were in a lot of pain because every time I sold it. And obviously there's ways that you hedge and you understand that better than anybody else. But it is difficult when volatility is getting crushed on an almost daily basis. And I think by the end of 1994, I'd probably short something like 100 or 120,000 options across, you know, a fairly narrow strike range. And, you know, even for my own people at Barings, I used to use some of the options guys who were trading in Tokyo to take up some of the volume that I was selling as well. So
you really were the market.
I rinsed everybody at this particular point. It was, you know, I'd be phoning my own desk and do you want some of these options at this price? And, you know, the FEMAT guy and the market makers as well. So I was one side of the market. Yeah, you're exactly right in that regard. But towards the end of December 1994, you know, my own guys from the trading desk, so there was a guy called Adrian Brindle, there was another guy called John Fu. Those guys would be calling me up and saying, look, they're having meetings in Tokyo. You know, it's quite a narrow market. You know, there's not too many people who are in the options market making business. Yeah. And so they'd meet for a coffee every now and again in Tokyo. And the subject would be me and this position that was going on in Tokyo, and they'd all be talking. Collusion is a strong word, but pretty much they were colluding in a way that they could start to push volatility a little bit higher. And so the 4 or 5 or 6 people that were in this market were all meeting together and having these discussions. But there was no stopping me, because it was the only way I could continue doing what I was doing and keep the eyes off of me. So it wasn't a case of thinking what volatility was, how you priced the option. It was just I needed cash, and you're my only way to do that. I mean, one of the biggest mistakes, and you'll understand this as I'm sure everybody listening will as well. One of the biggest mistakes they made on Cymex was that if you sold an option, you received 100% of the premium. So right. It was perfect for me. As long as I could come up with the margin, which the Treasury Department in London used to do for me on a daily basis, I could continue selling those options, taking the cash. The cash would go into the 5/8 account, as we all know it was called, and that would bring that account balance back down to zero. And it would defy any of the scrutiny that was going on in Singapore at the time. But there were I suppose there's a couple of things to come out of that. Episodes yourself when volatility, or the fear index, as it's sometimes called, has been as high as it has been over the last period. I think the pandemic was the last time that we saw these sort of levels in the market. And just, any stories from the marketplace about, when something was very one-sided, you were getting hit time and time again, or lifted time and time again, and the market was running away from you, and how difficult that was, I suppose.
Well, actually, you were trading the Nikkei index, the futures and the options, but I was a short sterling trader, so short-term interest rates in the 90s on the life floor. I was an options market maker. So I would have positions in several different strikes over several different months, hopefully spread off as much as possible. But what I like to do, because those markets didn't move that much, and I just was a volatility seller, actually. So I was often short the wings, as they used to call them, short the puts, out the money puts, out the money calls. Anyway, generally I would run a short book. And so I didn't want things to move, and I did want time to move on quickly, so that the time premium would erode. And, I had varying levels of success and failure with it. But I do remember the 1998, I think it was the Russian bond crisis. I think Russia defaulted on its bonds. Yeah. And the short sterling started to rally. They were looking for rate cuts, and it started to go aggressively, and I couldn't keep up with it. And the vol exploded, and I couldn't get it back. So when you're short vol, you're getting screwed on your gammas, because the futures are moving. You need to keep buying and buying and buying the further they go to hedge your position, and the vol goes up as well. And it crucified me. I'll never forget that. Yeah.
But I mean, at least some of the stuff that you were seeing coming through the markets at that time was, fundamental or technical. Whereas me, I was just insatiable, and it was never going to stop. And it was, I suppose, the only thing that stopped it down the line was the fact that I couldn't fund it anymore. The Treasury Department were finding it more and more difficult to give me money, which meant there was no margin, which I couldn't sell any more options. And it always makes me laugh sometimes when I'm at the event and they, you get asked a question about strategy. And I think people, I think sometimes they try and overplay what I was doing. It was panic. It was, it was born out of necessity. And really it was just a cash play. But interesting story, or a slightly different story. I was at an event in Holland a number of years ago when I came back from Singapore. And I mean, I don't know if you know of too many markets where they pay you all of the premium, but apparently in Amsterdam, if you sold options, you also got 100% of the premium. And
that's interesting, because I remember the Dutch guys used to love selling premium on the floor.
Well, that's what that's what they said to me. They said we sell the options on a Friday, and we go away for the weekend, and we have a good time and whatever else. You bank the premium, and you come back and you worry about it on a Monday. But as you'll know, most of the markets are mark to market, but Singapore wasn't at the time. I'm sure that's changed over the years, and things are a lot better. But it was one of the things that allowed me to do what I was doing all of those years ago. So 2 markets we want to just cover off a little bit with you, Jason, before we finish up here. So gold, I thought there was another spectacular call of yours on Monday. Was looking at some of your stuff that came across, and you were calling the market to see some technical buyers around 32.10 to 32 even in gold, I think it was. And that was spot on. I think we traded 32.09, 32.08 maybe, and bounced up the best part of $40 from there. So just a little bit about that. What you were seeing, I suppose, on that day, and I think it was Monday.
Right here, where I've got my cursor. So it was pure and simple. It was just a fib level and a feeling that we would bounce. There were some things on the short-term chart as well that backed up that level, but pretty simple. And as you say, we had a really nice rally up from there. Didn't quite retest the previous high, and we've now made a new swing low anyway today. As you can see, we've come down to what was it today?
I think we've come down to about 31.25.
31.20.
Yeah.
Now that confused me because we broke the 50-day moving average. We broke a trend line that goes back 13 months. It's a pretty good trend line, and I was buying it down this morning around the trend line around 31.45, 31.40. We broke. I reversed. I got into a short position, and then I got stopped on that on the way back up as well. So it's murdered me today, and I now have absolutely no idea what to do. We've got this long lower wick on today's candle. If we were to close here right now, we'd be almost unchanged after being $55 lower this morning. I don't know what to make of it. I mean, that could be a low test, and then we could resume the bull trend.
Okay. Yeah, I mean, I think murdering is a good word to use. It sums up what gold did to me yesterday on some of that move lower. But if you're trying to pick a bottom, it's never easy, is it?
No, not you. Well, certainly not today. I've got it wrong, and the market fooled me. Put it that way. It does that occasionally.
Yeah. Just one further question on gold, just before we finish up with it, Jason. I mean, if you want to you've given a brief idea of where you think it is from here. It's a difficult one to call today, but one of the other comments you made or have seen over the last number of days was that gold is definitely your preferred market. It's the one that reacts better to the technical analysis. Do you want to explain a little bit about that, and maybe any other markets that you follow in that regard? I think you mentioned FX as well.
Very simple. One of the key things that I do as far as technicals are concerned is I'm a trend follower. So gold has been relatively easy to trade, especially compared to some of the Forex markets, because it's just been in a longer term bull trend. So as long as you stay in the direction of the trend and you're buying it on dips, just like the stock markets, buy the dip and it's worked. Pretty simple. Slightly more complicated right now, as you can see, because we've got a lower high and a lower low, and I'm lost today, as I said earlier, but eventually I'll get back on track with it. Stock markets would be the other one I would compare. And you were talking about it earlier. Volatility, when it explodes, it's always a sell because the stock markets always recover.
Yeah. You want to.
There'll be a time when they don't, but not right now.
No, hasn't been that way for a while. All right, should we get a quick look at Bitcoin before we finish up here? I mean, obviously we saw it on one of these episodes where it was moving back down towards that 76 level. It's rebounded hard from that point. I think we traded up towards pretty close to 106. I think late last week or early this.
Correct.
I remember being on the wrong side of that as well. No surprises there. But maybe a bit about Bitcoin and what you see for Bitcoin going into the next week or so. Yeah,
well, as you say, that dip got down to my target around 74,000, 72,000. Big buyers in there. We've had a very aggressive bounce ever since. Of course, real good run up. So probably resumption of the bull trend. Of course, it's going to be key around 108, 109 previous high. Small double top there, which triggered that correction to the downside. But of course, Same with Bitcoin. Every time it drops, the buyers do eventually come in, and the bull trend does resume. We're back above the 100 and the 200-day moving averages. 50-day moving averages just crossing above the 100, so that's another positive signal. The 100 seems to be just turning positive. Yeah, everything, it all hinges on the previous all-time high. I think the exact all-time high is, let's have a look, 109071. We break up through there, which I'm sure we'll do eventually. I don't know when, and then we're on the next leg higher in this bull trend.
Okay, so maintaining fairly bullish with Bitcoin and gold, as yet undecided, but I'm sure we'll see a piece of analysis coming out from you later today or tomorrow, as you always do. Thank you very much, Jason. I think that was great. I'll get back to some of this volatility if you may this afternoon. So if you like what you're hearing here, please continue to subscribe to the podcast, like and share as much as you can. We'll be back with Jason from time to time over the next short period. And as always, Jason, it's been a pleasure. And I wait for your next call on the market.
Yeah. Hope it's better than the gold calls this morning. Cheers, Nick. Nice to talk to you as always.
Take care, mate.